Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for Monday, June 12th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We had a wild finish to Friday's session. Price got as high as the 24.43 halves, dropped as low as about 24.10s, 24.12s. Significant decline. Just a massive sell-off, but nothing near what we saw in tech and the NQ, but just a wild finish here. We still remain in an uptrending market, so these pullbacks will still be seen as big-time buying opportunities. At the moment, there's a bit of absorption happening off of 24.19, and the top end is 24.30. So right now, that's the short-term trading range. At the moment, if there's any failure to hold 19s, that will likely spark another push downward. And remember, 2400 to 2404 half is the next key level down. That could be an area where bulls may want to defend for an attempt at higher prices. So if you look at the intraday time frame right now, again, the level to watch is 24.19. This is the level we talked about before. At the moment, you can see how price dropped significantly. Once it hit that low here, it bounced back up, got back above 24.19, and this is where some of the absorption has now occurred. The top end of the zone, 24.30. So short term, bulls are looking to defend here, bears are looking to defend here. At some point, one side wins. Above 24.30 starts to return prices back toward highs. Below 24.19 searches for new lows. So that's the range to watch here. All right, let's take a look at crude oil. Here's a look at crude. We talked before that any drop down toward that 45.20 could be a significant buying opportunity based off of how price reacted the previous time and how that's been an important area. The 45.20 is an FOMC key level. 45.17 is also an FOMC key level. And 45.20 was the low. We held 2 sessions in a row. And now stops are coming out above those highs. And here, we've reached the first short-term buy target that we talked about before. So I mentioned if price does get into this low, the idea would be for a return back toward 46.69 and 47.10 as a very short-term high probability target, followed by a shot at returning prices back toward 48.42, which is the March 15th FOMC key level. So right now, short-term prices are pushing above this recent high. That's 46.30. Any pullback to 46.30 could be a day trading buying opportunity for a continuation. Any failure to hold above 46.30. So if there's a rejection of these prices, that would be a big-time signal to sell it for new lows. So if there's any failure to hold 46.30, we could be headed for another leg down. All right, now taking a look at the intraday time frame here. On the intraday time frame, you'll notice how strong price has been. Again, 45.20 was the low. Since price got above 46.30 here, it's been a sprint, even 46.20. That's where the breakout point has been. You can see pullbacks have been defended. Right now, we have a very vertical slope to this thing. So all pullbacks are buying opportunities. Perhaps bring up your pivot-based EMAs and look to defend pullbacks. So far, 46.69, which is MCVPOC, has been the high of the day. On a return trip here, we could see price push through it and into 46.90 and continue higher. So right now, pullbacks, as long as this price zone right here, 46.20 to 46.30 remains intact, all pullbacks, including into that zone, could be great buying opportunities for a continuation higher. Failure to hold 46.20 opens up a return back toward recent lows. All right, let's take a look here at the NQ. This was a significant sell-off that we saw in the previous session. If we look at the higher time frame here with the PivotBoss pivots, you'll see how big of a pullback that was. This was a huge sell-off as well, and this one far eclipsed it. If we take a look at our PivotBoss ADR indicator down here, I can make this a one-day look back here. So right now it's looking basically at the last one day to give us this info right here, and look how big that day range was. So that's basically showing us the range of that day, the range being 238.5 points. far surpasses anything we saw before. We saw this huge day. This was only 149.25 points. So big time day. Typically speaking, after you see a big day like this, a high range day, the tendency is to form a trading range and digest those recent prices. But overall, this pullback could lead to another buying opportunity as soon as we see rejection. Rejection could be beneath this low. Rejection could start to run, above this highs. Could spark a short squeeze. Rejection may not come until this LVN, so we have to see where that rejection low comes in. We may have seen it already, but again, we have to see how this continues to develop. At some point, we could be back toward highs very quickly after rejection. So this thing continues to remain bullish until on a long-term basis until proven otherwise. If we look at the intraday time frame right now, even with the recent pullback here, you can see how sharp that low was right here, that 56.69. That was the low of the day Friday, and a big sharp bounce occurred back toward 57.60. So that was a huge 90 handle rally there. Since then, we've come almost back to the lows, reaching low of 56.80 basically, and you see right now that bears are defending VWAP in the downtrending move. So right now, this is the larger trading range. This is the lower edge of the range. We could see price trade back and forth in this range until we see another major directional move. So this one's hard to call right now other than VWAP trending down. So bears currently have the upper hand and are currently defending VWAP. If there's any rejection of these lows, that would spark a stop run above VWAP back toward the previous close. All right, lastly, let's take a look at gold futures. Here's a look at gold. If you take a look at the higher time frame, something we talked about to begin last week, so that was Monday last week, I mentioned that any push beyond this high, say into 1298 to 1300 or beyond, could be a rejection opportunity for a move back toward this pink dotted line, which is 1260, or if you zoom in, it's probably 1259. That's the idea last week. I thought that we may see a push a little bit farther beyond it. I was a little surprised how quickly that rejection occurred. And really, once price gave up 1280 and even 1290, that was pretty much a big indication right there. But we've already made it most of the way down. At the moment, bears are still holding prices below 1282.5, which was important in our trading room, and that continues to signal more weakness. So right now, given the rejection of this previous high, the implication is still that we likely continue lower toward composite VPOC at 1259. Once we get there, we could see some chop back and forth between, say, 1240 and 1265s before we extend perhaps toward the bottom edge of the range. So that's the likely path here on a longer term outlook, as long as price continues to remain below 1280, 1282.5. All right, let's take a look at the intraday time frame to finish up. Looking at the intraday time frame here, one thing you'll notice is price is coiling up yet again. So we've been in a steady downtrending market. Here's the LVN right here, that's 1273. That's the area that I mentioned to our trading room bears want to defend. And so after this bounce, so when price rallied, that's been the high so far, and price has rotated back down. So right now, that's the key level, 1273s. Bears trying to keep it offered for a continuation downward into 1260, 1259. Failure to hold 1273s would suggest a return back toward the 1280 key level, and that would offer another opportunity for bears to defend the current downtrending market. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session and the rest of the week. Good luck, trade well, and happy Monday.